Okay, we're back to this entry. We're going to entry 14. 2 more entries. Here's what happened. May 29th. Made refunds to cash customers for defective merchandise, $100, period. Second sentence states, the returned merchandise had a scrap value of 20. What must we do? Let me explain this to you. Probably Canella knows this. What we have to do, Canella, is that we have to remember, now, you know the A and B entry? Okay, as Mike stated earlier, we have to commit to memory the A and B entry for a sale. Here's that entry again. You see that entry? There's our entry in 11 for the folks in the internet land. Okay, that entry is going to be reversed. Now that's a repetitious entry every time we sell something. We're going to flip that exactly, except instead of debiting, you know, it could be cash or receivable, incidentally, on that.
That would be sales and allowances.
We're going to debit sales allowances. I'm sorry, sales returns and allowances for the amount of 100. That's a debit. Fix your debit D and C. Okay, cool. And we're gonna the effect of that. Okay, and then we're gonna credit the other account that was originally made, which was CASH, cash. So therefore, cash is decreasing 100. Step A has been done. Step B, we're going to flip-flop the second part of that common entry. We're going to flip-flop the CGS and the inventory, in this case, in the amount of $20. Why? Because the inventory given back, it wasn't new anymore. It has a value of, scrap value of 20, and we decrease the expense 20. And then we post to our T account. Go back on the tape and review that. It's a tricky thing, but in order to do that, now she's going to post. Now she posts up the sales returns and allowances. You see, by debiting that account, it has the same effect of debiting net sales. For example, now let me ask you a question, Canella. What is net sales right now? Do you know?
So far,
what is net sales right now?
80. You want the amount or
you tell me the amount if you want. It's 10, I'm not even sure because I don't, well, I know, I don't have a calculator with me, or shouldn't need one. It's 10,000, see the sales is 10,200, you see that?
Yeah, 10,000.
10,200 minus the contra accounts of 140 is net sales. That's called net sales. We'll deal with an income statement next time we get together.
So it'll be 10,200 minus these two?
Exactly, that's called net sales. What's in the net? You see, that's called what's in the net. And that's what they do in the net income. We'll talk about the fact that back in the Old Testament, or in the New Testament too, the fishermen, they go for what's in the net. You don't care about your paycheck to gross, right?
Yeah.
You care about the net. So that's what they care about too in financial analysis, the net. That's called net income, net sales. Now, the point Mike was making was that by debiting sales returns and allowances, you decrease the revenue, A. Okay, B, she decreases cash, and she flips back. The bottom line is this. Here's the bottom line, what Mike's trying to say to you. As long as you have the entry committed, memorized, right, the entry 11, we reverse entry 11 for the proper amounts. And then we debit sales. We don't debit sales, we debit sales, returns, and allowances. Last entry. Right, the very last entry is a repetitious entry. We sold merchandise for $1,600.
Did you want me to finish posting?
Oh, you post that up to the T accounts, my bad. She's gonna post up, she posts up sales, returns, and allowances. She decreases cash 100. Our power's running out. We're still going though. If it goes out, that's the end of the tape. Then she posts to inventory 20. This is entry 14. Then she decreases the expense. A rare case where we decrease an expense. The very last entry in the problem is where they sold merchandise for $1,600. The cost of merchandise was $1,120. So let's see if she memorizes it. Let's see how we'll give her a test. We sold merchandise for $1,600. What's the entry?
Accounts receivable?
True. There's terms.
1,600?
That's right. And what's the other account?
Inventory? No, we sold merchandise. Okay?
Sold it. What do we do? We performed the service.
Oh, so,
There you go. Okay, that's part A. Part B, we recognize the perpetual aspects.
then it'll be, cost of goods.
Cost of goods sold and inventory. And cost of goods sold expense increases by 1120. The asset inventory decreases 1120. Tomorrow when we get together, we're going to talk about periodic method. Well, guess what? Guess what? The accounts cost of goods sold and inventory don't exist in that method.
Yeah.
We'll talk about that tomorrow. That's right. We'll talk about, it's called beginning inventory in the periodic method. Okay, kids, we hope it's a good tape. And she posted her T account. Let's just get that last one. She posted up, account receivable. She posted, gotta always post, because she's gonna do a trial balance later. She posts to account receivable. She posts to sales. She posts to CGS. And then she posts to inventory. And we'll see you all next time.